Vladimir, you're on.
Good afternoon. Thank you very much for inviting. It's a great pleasure and honor to be here with you today. And actually, I'm not sure I will say something new you don't know. Key points of the presentation is just to show how we do investor relations in our company. Every day, we are learning from international companies through global leaders in market capitalization on developed markets, and that's a long way for us to go. We have established a lot of practices in recent years, and that has brought results, but still a long way to go, as I mentioned. So listening today to the panelists, I have made some marks for myself, the way how we can improve our investor relations going forward. It's a very brief presentation. I will start with a couple of slides just about the company and the area in which we operate, how investors are viewing our sector, because it's quite important. There have been several questions before. Is it generalist investors that you are mostly seeing? Is it specialized investors? So, I mean, depending on the sector, it makes a lot of sense to have this in mind. So our company is making steel out of the captive raw materials we have. It's one of the biggest in Russia, and it's supplying it steel globally. So basically, that's our core business, making steel for automotive industry, for shipbuilding, for construction, for a lot of our industries. Everywhere you are seeing steel, this is something what we do. And it's the whole production line, high-valued products as well. We are supplying in Russia to Volkswagen, to Renault, Nissan, those companies that are assembling cars already. So if you look at the global landscape, because regardless of the company size in our industry, I will touch on that later a bit, is that investors are looking at you not as a purely Russian or Polish or European or Chinese company. You are exposed to the global commodity and steel products markets everywhere, regardless of your size. There are definitely global leaders in size. The biggest company globally is ArcelorMittal. It's a Luxembourg company with Indian exposure, but still, ArcelorMittal is one of the many companies globally. Steel making is a very fragmented industry. I will just give you a couple of figures. Out of 1.6 billion of steel made annually, Arcelor, as the biggest company globally, is making only 100 million a year. So I mean, just an example. But investors are also not only looking at the competitive landscape and the way the prices for commodities or steel products are going. The investors are also looking at the marginality of your business. So the scale by itself, it matters a lot because it helps you to service international companies or clients globally. Like any huge company, you can have a long franchise around the world. But still, that may not generate you a lot of profits. And then it means that unless you are a high growth story, that would not translate into dividends, and you would have a huge debt because steel making is a very capital intensive industry. You need to invest all the time. Our capexes are very huge, much higher than some of the consumer industries. So if you look at the global ranking, like the Republic information, so you see in our company, we are not a global leader. We're making annually only 15 million tons of steel. And now we'll be making even less because recently we sold our North American assets in the United States. So we'll be making only 12 million tons of steel a year, but still that translates into one of the highest EBITDA per ton, EBITDA margin, and net debt to EBITDA is very low. Why is that? There are natural reasons, because due to the resources we have, the local demand, availability to access to export markets. So really, it's a place to make steel. But also that wasn't the case several years ago. So I mean, the company has made a lot of changes after the 2008 crisis, reducing its debt, divesting non-performing assets. So I mean, that hasn't been all the time with us. I mean, we had to change our strategy. We learned mistakes from the write-offs, from unsuccessful investments. And now we have become a very conservative company with a very conservative balance sheet, and looks like in the right timing because things have become much more challenging than before. the specifics of the steel and mining sectors from the investor point of view, it would be very good to have Magdalena in the room. Unfortunately, she left, but I will describe my impression of when meeting investors, what they are looking for. As I mentioned, investors are looking at your company from the global perspective. So if they are hearing, for instance, in China, there is bad production data, commodity prices are falling down, you would immediately see your company being sold regardless of your fundamentals. It's a global play, absolutely. Sometimes nothing is happening with your business, nothing is improving, but you are hearing in the United States comes very good production statistics. Your share price is going up. So I mean, it's very hard sometimes to understand the way you can impact the effect, actually, the share price growth. We hope due to a number of communication initiatives, corporate governance, we still can add value as investor relations. But frankly speaking, the global dynamics of the economy, of the commodity prices matter much more in this industry. A second thing is it's a cyclical industry. If you look at the steel and mining companies, it's not like pharmaceuticals, consumer, or technology. There you can see a growth of Tesla shares like that way, or Google, or something like that. If everything is growing up in the global economy, your company will be going up. The same company can cost 3 times less with same company, with the same debt level, with the same production level, sometimes even with the same EBITDA margin if you make a lot of efficiency programs, but can be 3 times cheaper in case there is a global economic downtrend like we had in the crisis. So I mean, it's a very cyclical industry. But for the same reason, investors sometimes like to have steel as a small chunk of their portfolio, because you never know. Those shares are very volatile. You can have them in small amount, but they can grow like I would give you. Now it's a very strange volatility we have definitely on the Russian stock market, but before, a typical blue chip company like a bank, leading Russian bank, had a volatility of around daily 0.5% one or the other way. You would see a company like our sector with the volatility a day of like 3 to 4 to 5% every day, you know, plus or minus, regardless of what you do. So I mean, it's very volatile, but investors who are focused, who understand the cycles, who are specialized, they like such stocks because they know how to make money in this industry. Sometimes they build the pairs. I mean, they can short one company and the other take as a loan, and it works very well as well. But typically, we're a small chunk of the investor portfolio because that's very volatile, unstable shares. People don't risk much. The company itself, so we are now at 8 billion market capitalization, which puts us right now as a large category, from mid to large. Free float is 20%. The rest is owned by the company majority shareholder, who is also a CEO of the company. We have double listing in London and Moscow. Average daily trading volume is 20 million a day, which is quite solid for us to be an attractive target for companies like Fidelity, BlackRock, UBS, the huge funds. So we don't suffer from that. We have Eurobonds as well, and we are part of the MSCI Russia index. So just a very brief. So you can see the share price performance since the year to date. It's depressed, still better than MSCI Russia index, just the reason I mentioned you. And if you look at the correlation and the way those lines overlap, you see the share price is very volatile. So I mean, it's very easy to see where investors were losing money investing in the company, and then they could make much better than the index, just to confirm what I mentioned on the volatility. About our team, including myself, we have a team of 3 people. We make annual and regular benchmarking to some global companies. That's something I have from Investor Relations magazine from last year, which probably indicates we are right, in the right way. 3.3 is a strange figure, I assume, but we are free. We don't have any like half person or a quarter, so it's absolutely free. Yeah. What actually we are looking, and the key focus beyond making typical annual reports, websites, updating presentation, which definitely probably will be too boring for you to listen because you understand and you do it every day in your job. So our key focus is looking and monitoring the investor perceptions around the company and the sector, because due to a number of reasons that the steel stocks, as I mentioned, they're a small chunk of the portfolio. Sometimes investors do not update themselves regularly on what is happening in the company. So I mean, they can have old stereotypes of being with your company like a couple of years ago, and they can still believe you have the same advantages or challenges. Or they may have a different opinion about your peer group. They may have some preferred company which was a leader many years ago, but not anymore. But it's a very tough stereotype to overcome. So, I mean, we monitor that. We try to make internally in-house and with the corporate brokers we have, CEE and Deutsche Bank, we try to analyze the way the perception of investors and analysts correlates with the physical, financial, and operational benchmarking of their peer group. I mean, like, we make the physical benchmarking, right? All the public data is disclosed, and this is when you can see, and this is when you can come with the data you have at hand, comparing to the peers, to the analysts, and say, guys, why you still believe it's like that? It's not anymore. So, I mean, that's one thing that's important. There are a lot of stereotypes in the sector, and since our company has passed a very long way and a lot of changes in the recent years, it's worth dedicating a lot of time to explaining the company how we look today. Secondly, we try to support the company strategy in all the materials. Analysts are a very important group for us, and was very interesting listening to the previous panel. So, I mean, we are fortunate to have very good coverage from like at least 15 international and local banks, because beyond our company, there are 4 more listed Russian metals and mining companies, which makes a huge pool. I assume if we were the only company in Russia in that sector, that would be a challenge. But since there is a peer group, it's much easier for us. To keep the board and management updated is very, very important, so they have very clear expectations of what will happen. Let's assume you announce a special dividend. Unless you will explain to your very top management, top level, that after the special dividend is paid, your share price will fall pretty to the same amount of the special dividend announced. While it may take half a year before you announce and before you pay the special dividend, because there are some procedures or transactions need to be completed. Within that time, your company can grow by at least 1 billion, like exactly happened with our case. We recently announced a special dividend. So, I mean, the management should be ready that the market cap can fall, not necessarily, but it can fall by 1 billion. And that would be financially rational. It's nothing personal. And people should be ready, because we have definitely already seen every day, like, share price growth. They're already used to seeing that it's worth 8 billion. They don't want to see it again be worth 7 billion, but it can easily happen. So, I mean, you should be very updating your top management, the board, much beyond your communication materials. Very often we prepare very sophisticated financial research and models, getting feedback from investors and analysts, and send it all to the management so that they could see it. Trainings for the top speakers, it's all the time happening, because we need to update the speakers the way we explain the company's strategy, so that everyone is consistent. Because sometimes, I will talk about that later, and you can see, so we have the lucky of having not only our CEO, C4, but wider management group and then even independent non-executive directors seeing our investors. They all should be updated the way we as investor relations and the very top management communicate what is happening in the company, what will be next, to avoid, you understand, right, miscommunication. So, the formats we are using, they are very obvious. It's broker conferences, site visits. We have I mean, for us, having site visits is a very natural thing, because we are an industrial company. We are headquartered in the capital of Russia, but all the assets are definitely beyond. I assume it could be quite complicated for a bank or telecom company to arrange site visits, but I'm sure there are like very good examples how you do that, and my colleagues will share. But for us, it's a very easy thing. You just take the guys, you bring them to the assets, you show what it was, how will it look after your investment, and then you get some analyst coverage. And investors, analysts who have seen the assets with their own eyes are very often much more trusted among the investor community than those that haven't left their office. Because still in mining process is something you need to see. It's very difficult to understand how it's made just from the books. It's a typical capital markets day. The whole top management, including the majority shareholder and CEO, comes, typically we make it in London, because this is where our biggest chunk of the free float is based. It's a typical strategical update, followed by the Q&A. Before that, in the morning, so we come for one day. We typically make the capital markets day in the second part of the day, like after the lunch. In the morning part of that, we have a lot of pre-arranged media meetings where the top management can explain why they have come, what they plan to explain, what's going forward, and give interviews. So the next day you get not only the analyst coverage from the Capital Markets Day, but you also get a news flow from the leading UK financial media, from FT to London City or whatever. So I mean, that's a good combination. And we all the time make the webcasts so people could see the way management looks, speaks, and it's available around the globe, so depending on regardless of the time differences. So that's the site visit. You can see sometimes, this is all the analysts that are covering the company. So you see it's a lot of people. Yeah. That's internal research we are making daily, weekly, and monthly for the top management, where we explain like what is happening, the way we have moved, the way other companies are moving, why in our guest feeling or information from the banks. I would probably not comment much on that slide because I included that and would like to discuss with the colleagues is like future challenges and opportunities for the investor relations profession in general, regardless in what field you are working with. And there are natural things starting from technology to like social media to more passive investment. So I mean, those obvious things, but probably I would leave it for the Q&A. If there's any interest to discuss, I would be pleased to join. Thank you very much. That completes my presentation.
Thanks, Vladimir. Now let's hear Barbara from Chess Group.
Hello. It's great to be here. And I'll have the similar structure. I'll shortly introduce what we are doing and then focus how we go about investor relations. I make it quite brief. Hopefully I will tell you something we are doing slightly differently so that you are not completely wasting your time here. And I hope that you will have questions afterwards. So we are a Czech utility. We are based in the Czech Republic. However, we have expanded to other countries in Central and Eastern Europe. So we like to call us our international utility. We are present in all parts of the electricity sector, starting with mining our coal for our power plants, and then having distribution networks through which we get the power to customers. And we also have basically supply businesses, i.e. those are basically the company that actually sends the bills to final customers. Still, from an earnings perspective, majority comes from electricity generation, which has been in Europe liberalized for a long time. So utility, even though some investors still perceive it as a safe, regulated business, it's not longer the case. And we are, to a large extent, commodity-driven as well. Similar, the volatility is lower than in steel, but the commodity exposure in our business is there as well. In terms of size, given that basically drivers of our business are rather pan-European rather than Czech, whatever happens in the Czech Republic has almost no relevance to our business. Therefore, we like to benchmark ourselves to other Western European utilities. And on there, we are in roughly top 10 by market size. But our key advantage is that our profitability is quite high. The margins are among the highest in the sector. So right now we are number 9. There were times when all the management cheered when RWE was actually smaller than us, which was like very proud thing for a Czech company to say that we overcome a big German rival. Now I'll talk a bit about our investor base. I think it's pretty similar to what you see in other emerging market companies. Most of the free float is held by US institutions and UK ones. The names, you would see the big asset managers as everywhere else. One thing which is slightly different is that we are 70% owned by the government. but I would say that the involvement is pretty limited, so that doesn't create much of a governance concerns. What is also a bit special about the Czech equity market is that we have almost no local investors. So local institutions are not very important for us, apart from basically two guys, ING, Czech Asset Management branch, and the local PPF, which is managing some insurance money. We have no big Czech investors. And actually Poland is more important to us than home market. In terms of basically Prague Stock Exchange, you might know that it's not a very big market. The market capitalization of the Czech equity market is about 40 billion, out of which we represent roughly 12. We are by far the most liquid stock, and pretty much the only one which has active IR program. So we are a bit of an orphan there. With other companies, there is a handful of others which are listed and sufficiently liquid, but because they have because of their majority shareholders, they do not have much. They do not do that much roadshow. And the performance so far has been quite good this year, which is finally after like 3 or 4 years of pretty bad performance of the whole utility sector in Europe. So finally, we are doing quite well, both in the absolute terms as well as relative to the benchmarks. And now, why I switch to what we are here mainly to talk about how we go about investor relations. I borrowed this picture from IPRIO, which asked investors what they want from the IR, and I'll try to address the key topics by how we address that. So here, most of the things is quite obvious. Investors want IR to be informed, to be accessible, to know the business, and then other things like giving access to management, etc., are a bit smaller. So I'll start off how to become knowledgeable about company. Obviously, you have to be able to answer investors' questions. Not everything you know, so you have to ask around the company. And obviously, you need to be sure that if you call someone in the strategy, they give you an answer. And in order to help this corporation, we are also trying to be helpful to other departments, because otherwise you just someone who bothers them with the questions and adds them additional work for which they are not getting anything back. So the way I'm trying to be very helpful to them, whatever they need about the sector, about the market, I try to help them out. Even if I do not have the data myself, I'll basically try to research around and help them out. I.e., if the strategy guys calls me and asks, look, we need to do some presentation to the management, we need to have support for the cost cutting we are thinking about, do you know what other companies are doing? Obviously, some of the things you know from top of my head, but other things I have to look up. But it's certainly worth making the effort and helping other people within the company, so that they are, next time you need to answer something, they basically help you out as well. The second topic about accessibility of management. I'm trying to make a little joke here. The worst thing that can happen to you is you ask a CEO or CFO for a meeting with the investor, and the investor has no clue what the company is doing. So when basically trying to give management time to investors, it's my job, obviously, to have some research and make sure that the investor is prepared. Either you know him, you met him in the past, or you try to speak to the analysts and the brokers and make sure that they briefed him. And if you are not sure that basically the investors will not ask basic questions, they will just get access to me. Obviously, if you are sure that the knowledge is much higher, then it's no problem if they come around. I'll try to get as much management time for them as possible. I do not try, if there is time of the management, I do not discriminate, being a bit smaller. If the investor basically made the effort to come to Prague, I'll try to get a management as long as I am sure that they are not there to get a basic knowledge. It's a bit, yeah, and I'm lucky, similar to several staff, that I can ask several several management levels to do the meeting with the IR, with investors. It's a CFO, chief of strategy, and some 4 or 5 guys, one level below the board. So in that sense, I have a bit easier job. On the non-deal roadshows, I do not have any miracles. It's the similar miracle solution. It's probably what all of you do. We try, because the time of the board is limited, I try to get them as much as possible to the bigger cities, bigger locations, i.e. US, UK. And if they have 1 or 2 days available, on top of that, then I basically take them to other a bit smaller locations as well. One thing which we are doing slightly differently, I guess, for most of the IR, which is partly historical, our IR team is quite small. We are just 2 people there. And therefore, some of the external reporting is actually managed by the controlling department. Obviously, there we have a huge role in making sure that the content we need is there. But to some extent, luckily for me, I don't have to deal with putting together the tables, the basic comments on the financial quarterly results, or in case of annual report, I do not have to compile all the submissions from the individual departments. I just basically oversight the process, comment, make sure that everything we need there from the content perspective is included in this material. So I have, at the end, more time to answer the investor questions, more time to spend on the road. And it helps me also as well on pre-results dates, as even in that time I have a bit time to talk to the analysts, make sure that they are up to date with what's happened in the last quarter, so that their quarterly estimates are not completely wrong. And just last thing, the topic which probably doesn't really have an answer. What is the right way to measure the success of your investor relations? It's hard to basically put in the specific metrics. The way what we are looking at is obviously the key target should be to attract the investors, the right type of investors. In our case, what we are trying to do is try to diversify the base. It's to some extent the topic that was mentioned. The Czech Republic is still part of the emerging markets, but for sure, for most of the listed companies, those are not emerging market story. The drivers are not that local. It doesn't really matter much what's happening in the Czech Republic. So for us, it makes sense to try to address rather European utilities investors, where basically the drivers are similar to the profitability of our business. So that's one of the key goals we have been working for many years, and we keep doing that. And that's I think enough for now, and the rest we will be able to address in the questions section.
Many thanks, Barbara. We have Darius Horiwo, I pronounced it correctly, who joined the panel. So Darius Horiwo, Darius, who is head of IR at Bank Pekao.
Good afternoon, ladies and gentlemen. Can we have presentation? Very quickly, let me start with short description of the company I work for. We are the second biggest bank in the country. Number one in corporate business, number two in retail business, with a branch network of around 1,000 branches. And if I have to describe very quickly the business model, we are focused on sustainable revenue sources. We are very focused on the strong balance sheet, very good capital base, cost efficiency, and strong in risk management. As you may see in key parameters, we are doing much better than our average competitor in the country, which is reflected both in profitability and sustainability of our profits, as during last 15 years we're always covering our risk of capital, even during the worst times, and also quite sustainable dividend stream, where we're not able to pay dividend payout in the range of 70% plus, only 3 times where we met the limitations set by Polish regulator. Other than this, investors can expect from us really nice dividend, with dividend yield typically ranging around 5%. If you look at our investor base, 50% is in the hand of our strategic investor, Unicredito Italiano. The rest is quite well diversified, with the biggest part being in the hands of Polish investors, and the rest similarly to other listed companies in Poland, UK, US, rest of Europe, and some position also in the rest of the world. What makes us a little bit different versus our average peer from VIC20, definitively we have much smaller share of pension funds, domestic pension funds, as we were quite actively marketing our company abroad, trying to diversify our shareholder base as widely as possible. And this was also one of the reasons why, for example, we are one of very few companies who still stick with our ADR program, still keeping them despite the fact that they are definitively much less popular than several years ago. If we look at our investor base from a little bit a different angle, just looking at the type of fund investing in us, I would like to draw attention to 2% of free float, which is in the hands of US pension funds. Definitively, this is the group which is quite keen in investing in us. Relatively small share in GEMS, Global Emerging Market Funds, as for them Polish equities were always simply too expensive. They always complain that Polish banks are traded with significant premium to the GEM peers. And relatively high share in category of other, where from one side represents non-emerging market investors. We see quite significant interest from this group, and also hedge funds, which is very broad group, difficult at this moment to distinguish, as you may have very aggressive players there, who generally speaking is really short-term leverage players. And also we have some hedge funds who keep position in PKO for last, I think the longest is 7 years. So I also wouldn't cross out hedge funds as your investor base immediately. As I wouldn't like to repeat what my colleagues said, I believe that the tools are more or less the same in each categories. I would like quickly to focus on the communication, direct communication for roadshows. For us, of course, the key market is Poland. We have 4 quarterly presentations here, webcasted. Practically all sell side presented in Warsaw is present on our webcasts. And typically we have around 20 buy-side investors participating, plus more or less the same amount participating from on the webcast from London and the rest of the world. And definitively I see that importance of webcasts are growing. At this moment, majority of my investors I meet also on the roadshows, at least listen later on to the webcast and the call. Quite quickly after the presentation, luckily for us, domestic sales side started to arrange domestic conferences. At this moment, it's typically around 4 per year. So we are able to reach other investors who are not present, or in some cases to give a little bit more in-depth presentation of our results. And from time to time, we also arrange our own roadshows, trying to meet both with key customers, I mean investors, as well as the rest of this group. Europe, in this case, we rely mainly on conferences. Of course, the place to go is London, where, of course, is the biggest investor base. Typically, we participate in 7 to 9 conferences there. Majority of them are regional, so EMEA. However, at least 2 of them are European financials, as we try to reach both groups, both our historical emerging market group, as well as specialized funds just dedicating their money to financial stocks. Other than this, we try to at least each 2 years to visit smaller investors communities like Vienna, Frankfurt, Paris, Stockholm, Zurich. Typically, this is IR trip, 1 day, typically around 4 to 5 meetings, as these locations are relatively light. Finally, if you look at the US, for many years we're going for roadshows there. At some moment we decided that it's enough to go for conferences. So we're at least twice a year on the East Coast and once a year on the West Coast. Such conferences are typically quite heavy, 2 days, 10 meetings per day, typically group meeting rather than one-on-one. So I believe that thanks to this, we're able to reach more or less the same amount of investors we're seeing on the roadshow in much shorter period of time, which, as you can imagine, is especially important on the senior management level. Overall, when we are calculating the number of meetings we have both on such conferences, roadshows, as well as during the reverse roadshows when investors are meeting us, in last 2 years we're hovering between 400 to 500 per year. So I may say we are really quite active in direct meeting investors. Majority of companies who invest in PKOSA at this moment know us very well. So in some cases we speak about key investors who see the company and the team for last 10 to 15 years. And if I were quickly to say what is important from the perspective of both IR and a company as an attractive investment vehicle, as sometimes it's difficult to divide these two. First, this is an issue of the strategy and the way you are presenting this. It must be simple and understandable to investors. In our case, I may say that what is also playing material role, this is consistency. We are telling at this moment in the same story, we are showing the same principles we're doing 5 or 10 years ago. We haven't got during this time any swings on reversals. We really are selling the same products, we apply the same rules, and we are focused on the same part of the strategy. And I think this is something which investors really like. Second, this is activity. Our role is being active meeting investors. Of course, it's much easier when you are a big company, as at this moment, this is your peak, as majority of sell-side guys will try to have you on the road. Nevertheless, you need to meet investors both domestically and, if you're big enough, also on international markets. What I think is one of the benefits and advantages of our company is the stability. We have the same CEO, who is the main face of our company since 2003. As a head of IR, I am meeting investors since 1998, with very short break. I may say that I know the company. I may say that market knows me. I have relationship. and I think also investors understand how to read what I'm telling, as typically also the same message in the delivered by different persons might have very different meanings. Jokingly, Polish companies are always very conservative. Turkish companies are quite optimistic. So when they are telling you 20% plus and we are telling you flat, it means typically that we are speaking about the same perspective. And finally, after these years, I may say one thing, that we see that over time the investor base is really adjusting to the company. I am today meeting very different investors than many of my peers. I am meeting the guys who want dividend. I am meeting the guys who want long-term perspective, who doesn't care too much about the quarterly results. And definitely they are not looking just for very short trade before or after the results. A significant part of my meetings are the guys who are really have 4 to 5 years time horizon. They are focused on the sustainability of results, and at least looking at the material positions, practically all of them has such approach. It doesn't mean that I'm not looking at our typical investors who really have short-term horizon. Of course, they still represent significant part of our investor base, similarly to majority of us here. But I believe that due to our approach, we really were able to attract longer-term investors. So very shortly, this is what I would like to share, and I am, of course, ready to answer any of your questions. Thank you.
Now, if there are any questions. Oh, come on. At least one somewhere. No? Oops.
Perhaps I'll ask one. I'm Danny Cormack from IR Magazine. Obviously, all of the companies represented there have achieved buy-in from senior management and the C-suite. For any companies here who perhaps have less traction with senior management, are there any tips you could give them to sort of put the highlight on IR Magazine, on the IR department and have them sort of buy into what you're doing?
It's a very good question. It's a very big problem for the profession. Absolutely agree with that. And I partly, in my last slide, highlighted that as one of the problems that for the future development of the profession. I will touch on it later. But to be very short in answering your question directly, so probably I would recommend to look for the opinion leaders that your management may have. If those are, for instance, like corporate finance banks, top-level chairmen of local banks or major international banks with presence in Poland, for instance, like in our case, our majority shareholder has long-term relations with the head of the couple of the international banks doing business in Russia. So, I mean, those guys are seeing him from time to time. They're discussing things beyond just steel and mining, but those are very trusted. So, I mean, for you as investor relations, you need to establish relations with those guys at least through the bank channels you have. Those guys are very influential. So, I mean, they could be helping you to communicate some of the investor relations idea to your management if the management doesn't listen to you from that level. Because it's quite a strategic move for the company to start meeting at the CEO level if the CEO has always been not that a public figure and not taking care of that part of the investor communication. So I mean, I would look for the opinion leaders. The second part could be is that when you make the benchmarking with the peers, typically companies that show the wider management, it definitely depends on the company fundamentals and advantages, but very often they have better valuations. So I mean, if you get a feedback from investors, for instance, analysts and the banks, showing that that peer has a better valuation, partly also due to that, the CEO of the company and CFO are much more available. So maybe you can communicate that And after some certain period of time, maybe they will listen to you. So that comes to my mind.
I have the privilege once again of working quite long in the company. At this moment, I have two hats. From one side, I'm responsible for IR. From the other side, I am co-responsible for the strategy. I'm involved in the process. I'm involved in a number of M&A transactions. So definitively, I have easy access to senior management, reporting also directly to CEO. What we did during the time also to increase our influence, first we started very actively to communicate back. Of course, the reports to the management board, reports to the supervisory board, but at some moment we started to issue our daily, or simply were collecting daily of sell side, trying to find the most interesting information from the perspective of our peer analysis, banking sector fundamentals, and some information about banks globally. At the beginning, we had very small number of people who were receiving this, just senior management. But over time, we started to see requests from other parts of the bank asking us to be added to our mailing list. It's taking a lot of time because at this moment, I believe we have something like 15 to 20 dailies we have to go through to understand if there is something worth to share with our colleagues. But definitively, this is something which is liked by colleagues from other departments, or managers to be more precise. And I think it's also increasing our position within the organization. We are conducting a number of, maybe not fully as a IR, but our sister unit within the department, benchmarking, quite in-depth benchmarking versus our competitors. We try to really understand their performance, going quite deeply. And once again, this is helping us to have full access to management. And I may say that at this moment, it's really not an issue for us.
Yeah, for me, in addition, what other speakers already said is, try to be helpful to the management, and then they are more inclined to meet investors. What helps in our case is that the board has quite a big stock options, so they care about the share price, and that's easy motivation tool.
Excellent. So if there aren't any other questions, maybe there is. Oh, I see one over there.
To maybe come back to a point made in the session before lunch, given an objective of IR is clear and consistent messaging, one of the suggestions in the earlier panel was to provide something to the sell side so that they have something to offer to the buy side. Can you maybe touch on how you treat inbound requests from buy and sell side, and if you do anything differently between the two?
Not really. I think what on the sell side, I'll try to give them as much information as possible, because simply they are the ones that are spreading the information farther out, and I certainly do not have time to contact hundreds of investors, which probably 20 analysts can do for me, partly. So I'll try to be as open with them as with buy side. And additionally, I try to basically, if there is something big coming out, I actively call the sell side, just to make sure that even the analysts who I know are not basically covering the company that frequently, that they basically understand our side of the story, which might come from the outside and from the newspapers, which is not always 100% accurate.
So in our case, we try to treat all the buy-side and sell-side analysts equally, regardless of the size of the fund or the brand name of the bank. And then regardless of a recommendation at the moment, as was correctly mentioned in the previous panel, today is one recommendation, the next day is the other recommendation, right? Today is a smaller local bank. The next day, the person can be working for Goldman Sachs or Morgan Stanley or something like that, right? So I mean, and in my eyes, I have been several examples of the analysts from very small Russian banks who were pretty neglected by the peers, but we didn't do that. And once the analyst becomes an analyst in a huge international bank, he still recalls that you were treating him absolutely in the same way than he was, let's call him a junior guy, right? From the practical standpoint of view, we have a team of 3 people that are very multitask. So we don't have, I'm head of investor relations, but it doesn't mean that I have any specific focus that my colleagues don't do. Yes, I'm present at the board and talking to the CEO most of the time when they have intercompany meetings. But beyond that, everyone is very replaceable. So I mean, everyone is doing pretty same. The front office, back office, analyst, research, we're all doing that. It's good for the company if someone of us leaves, right? And secondly, it helps to process much more requirements and inquiries coming to the company, because if you're traveling somewhere, your investors and sell-side analysts shouldn't be losing in quality and weight, right? The faster your reaction is, the better, and the speed is going up. Secondly, just an advice, because it typically works. When you see an analyst putting you on a buy recommendation, I think it's a very wise idea to suggest him that you travel with him, because it will give him a lot of credit. It's typically, yes, they do issue recommendations with the view of it's for the year, but the markets are so volatile that his idea with a buy may not be relevant in a month or in 2 months from now. So I mean, while it's still a buy and the analyst is so, I mean, determined that it's a strong buy, travel with him regardless of the brand name of the bank. Select a geography where you haven't been. I mean, if you have traveled to London, try Stockholm or maybe Frankfurt if you haven't been there. The analyst will recall that because you supported him in the moment when he put you on a buy recommendation. So that because typically after they issue a large report, they make a marketing. It's natural for all the analysts, right? So sometimes you can combine traveling with the analyst. So maybe that also helps.
I can only agree. I think it would be quite difficult to differentiate approach toward buy side and towards sell side. We are treating everybody in exactly the same way. That's all. I cannot imagine really to give or buy side or sell side a different level of access or different level of information. Forgetting even about the legal consequences simply doesn't work, because market quite quickly can realize that the access to information is not even.
I think we're going to wrap up and move on to our 4th session. Thank you so much. Thank you, Barbara. Thank you, Vladimir, and Dariusz and Violeta.